Hello everyone, welcome to my course on financial analysis for decision making. I'm the course instructor Mohammad Iftikharul Islam Bhuiya. Our module 1 is on foundations of financial decision making. Our module 1 covers an introduction to the role of financial management in corporations, then how management selects the best type of business formation and ownership. You know that there are three basic type of business organizations: sole proprietorship, partnership, and corporation. Over here, the management needs to decide what should be the best form of business formation to increase overall value of the owners or shareholders. Then we are going to learn what are the differences between profit and cash. And finally, we are going to look at profits versus shareholders' value. Now, let's look at the role of financial management in corporations. In general, there are some important questions which are usually answered by finance. First of all, what long-term investments should the firm take on? Over here, the long-term investment indicates firm's capital budgeting decisions. Then, where will we get the long-term financing to pay for the investment? It means firm's capital structure decisions. And finally, how will we manage the everyday financial activities of the firm? It means firm's working capital management. So financial managers need to try answer all of the above questions. However, financial managers in general need to decide on many other questions. So questions which are easily answered by financial managers or problems which are easily solved by financial managers are not limited to these three questions. Let's look at financial management decisions. First of all, capital budgeting. The capital budgeting answers what long-term investments or projects should the firm take on. So over here, financial managers need to decide what sort of long-term investment or projects will increase the value of the firm. Then financial managers need to take their decision on capital structure. In general, capital structure means mixture of debt and equity. So financial managers should try to identify how they will pay for their assets, or whether they should use debt or equity to finance their assets. And finally, working capital management. Working capital management describes how the firm should run its day-to-day financial activities. Let's look at the goal of financial management. There are several goals that a corporation should analyze. First of all, maximize profit, minimize cost, maximize market share, maximize the current value of company's stock. So if we look at the first one, which is maximize profit. Now the question is, if the firm try to maximize its profit, will it benefit its shareholders? In many cases, maximizing profit does not benefit the shareholders, because the firm can maximize its profit by decreasing cost or by taking an investment which will not bring additional value to the corporation or business. So only maximizing profit does not benefit shareholders or owners. Then minimize cost. Obviously, all the firms try to minimize costs, but on many occasions it is seen that if firm focuses on minimizing cost only, the firm has to sacrifice many of its investment opportunities. So minimizing cost will never maximize the value of the shareholders or owners. Then firm can also try to maximize market share. So firm can try increase its market share. A firm can increase its market share if it decreases its product price. So when a firm decreases its price of its product and services, definitely it will be able to sell more product and services to its customers. However, when a firm minimizes the price of products and services, in that case it also decreases firm's revenue and profit. So maximizing the market share should not be the goal of the financial management. Finally, we should say that firm should take all the decisions which will increase the current value of company's stock. So whatever decision will increase the current value of company's stock, financial managers should or need to focus on those decisions. So the goal of financial management or the goal of the corporation is to maximize the current value of company's stock.